Good morning, good afternoon, and good evening, everyone. This is Joseph Trevisani with another edition of Market Directions Interviews. Today, we are privileged and honored to have with us Steve Nison, the founder, the originator, and the popularizer of candlestick charting here in the West, probably the most popular analytical tool used in the financial markets. He's an old friend. We've worked together in the past. Steve, thank you very much for attending and for giving us your presentation. Welcome.
Thank you. And I guess when you say old friend, you don't mean old age. You just mean longtime friend, right?
I just mean longtime friend.
Okay, good.
Considering our positions on the age scale, I would not bring that up in such a fashion.
Okay. Thanks.
You know, it's interesting that when I was in the markets back in the late 80s and the early 90s till 2000, the charting methods that I used were not candlesticks. I have been won over by your education and by your introduction to both the elegance and the efficacy of candlestick charting. But it was not always known in the West. Can you give us an idea of, one, how this came about, where you got the idea, where you learned the origin, and how you brought it to the wider markets and the work that was necessary to do this?
Yeah, just very briefly, because I could spend a good half hour on this, but back in the 1980s, I was working at a brokerage firm in the States, and down the hall, and my job was giving trade recommendations to brokers, and down the hall there was a Japanese broker who dealt with Japanese clients, and once I was just sitting in her office talking with her, and I noticed this very thick book. And she was looking at it, you know, she started to look at it, and they were the Japanese, the Nikkei stocks in candlesticks. And I said, what is this? And she said, oh, this is our traditional method of charting. And I said, what? So that kind of piqued my curiosity. And so what happened is I found, and there were other things going on after that. I don't want to take time going into it, but essentially, I found an American who could translate from Japanese to English, and so I told him, when you go to Japan, buy every book you could on candlesticks, and he did, and I paid for him to translate all the books. So it took about a year for him to do that, and then a year for me to go through the translations and kind of synthesize and put everything together. And then for about a year for me to write my book, and that was in my first book came out, I think, in 1989 or 1990. And it was interesting. What really kept me going was, as I was doing the research, I started to make my trade recommendations to the brokers on candlesticks, and I didn't let them know that because I was still kind of feeling my way around it. And my trades became a lot better. I had when I was wrong, I knew when to get out quicker. I was able to let my profits ride. But the main thing is I was able to get those early reversals with the candles.
You know, when you brought this to people and started introducing it, first with the financial people downtown, was there any resistance? Did people say, what is this? How is this going to work? Did you have any kind of a hard sell to have to move this?
No, it was actually relatively easy because the candlesticks use the same data as the bar chart, open, high, low, and close. So I didn't have the onus of having to say, use this instead of what you're doing now. What I was able to do is, give them a little basic information about, candlesticks, how they're drawn. And just for those who are new, I made this slide here. We could skip this, but I'm sure most of you know how to draw candlesticks, but just in case, this is, how they're made.
Right.
You compare the open to the close, and if the close is higher than the open, it's white, and if it's lower than the open, it's black, or some of the charting services might be, different colors. But essentially, I was able to say, use this in addition to, because it uses the same data, the open, high, low, and close, all their traditional Western technical techniques, and this is what I still recommend to the retail self-directed trader, whether it's Forex or anything, is use your favorite Western signals. I have some of mine, I like Bollinger Bands and some moving averages and so forth, and just add the candles to them, because the candles will give you visual insights into who's winning the battle between the bulls and the bears. So on the left side here, we know it's a tall white real or green real body. So during that session, the bulls have taken over, and then the red session, the bears. And this is particularly important in Forex, because one of the advantages we have in equities or non-Forex markets, we have a gauge of the momentum by looking at volume. But in Forex, you don't have volume. So what's nice about the candlesticks, you can kind of use that as a visual gauge of the force of the move. So, if you have a tall white real body, something like this, the bulls are in charge along black real body, the bears are in charge. So, and then we know about doji, that's when the opening and closing are the same. That's a market in equilibrium. So what's great about the candlesticks, they're showing us the supply-demand situation in real time pretty much, unlike Western technicals, which I strongly recommend using, but a lot of them are lagging indicators. You need days of data to make a moving average.
Right. One thing about some of the, certainly the Western oscillators is that they operate on one basic principle, which is reversion to the mean. So you find that almost any oscillator, depending if it's above, high, or if it's over or under what is the mean, it's going to be advising one particular thing, which is why I've always used those. Mm-hmm. Only as a supplement to the information. I mean, certainly the candle just visual presentation is one, it's much prettier, and two, it gives you much more information. Do you think that helps people when they're certainly coming to the market as neophytes, as beginners, to kind of visualize what's going on in the market? Because people have a tendency to think of the market as if it exists out there as some sort of entity that you need to interpret it. But of course, that's not true. The market is us.
Right, right. And one of the great things about the candlesticks is that you mentioned the visualization. I just talked about the real bodies, but we have these shadows, that's the lines above and below the real bodies. So as you mentioned, let's say you're looking at an oscillator, and the oscillator is telling you maybe the market is oversold, and maybe the market is at support. And then if you find something what's called like a hammer with a long lower shadow, what you're seeing is the market at that time, this could be an intraday chart, a daily chart, it really doesn't matter. The market's rejecting lower levels because it opened here. At some point during the session, it sold off, and by the end of the session, it closed at the highs. So you're getting a very pretty, as you say, visual sense that the market is rejecting lower levels. And while the candlesticks, I extol the virtues of candles, one of the cautionary notes I send time and time again is candles should be used as part of a trading, I don't want to say system, but as part of the overall technical picture. So if we have a hammer and a downtrend, and it's not confirming support, as opposed to a hammer where the oscillator is oversold, the market is testing a multi-tested support area, which do you think I'd be more likely to be buying? Obviously on the hammer that's testing a support level. So the candles, and this is in the Japanese books, they will use Western technicals, and what they did is they combined the candles with Western technicals, and that's what we try to do here. Looking at candles, and I have experience in Western technicals since the 1970s. So we look at our education is showing how to use candlesticks correctly, because not every candlestick signal should be used to buy or sell. Sometimes you just ignore it, and when to get more aggressive on a potential trade.
Knowing a little bit about Japanese art, I would certainly expect almost anything that comes out of Japan to have a certain sort of simplicity and elegance to it, which is attractive to the eyes. Do you think that the reaction or the experience that people have with candle charts is due to something inherent in the system, or is it simply that it provides more access to information and makes it visually easier to integrate into your idea of what's going on with the market?
I think it's the latter. It's the visual information. It's what's happening right now. Like I said, with the candles, you could see immediately who's winning the battle between the bulls and the bears, whereas some traditional Western indicators, there's a lag time to it. And it's pretty. You could have green and red candles. And it's really interesting. Speaking of interesting, when my book came as far as visual information, but it's also, the Japanese are very fluid in their language. They have a lot of great proverbs. And when my book first came out in the 1980s, late 1980s, or maybe it was 1990, at the beginning of each chapter, I put in a Japanese proverb related to that particular candlestick signal, like for a doji, which is a potential bearish reversal signal, like the Japanese proverb, darkness lies an inch ahead, or something like that. And that's what the press picked up on, or the proverb.
I'm sure they did.
Yeah, they love that. They love that. Those were those sound bites, or stuff like, the candles are not always 100% right. So I had a proverb, even monkeys fall from trees. And so yeah, the press really liked that stuff, and that's. Well,
maybe Bloomberg does that on their terminal. They give you a quote of every day.
Okay.
Maybe Maybe they picked that up from you.
Yeah, yeah. Well, like Mark.
I think your book and what you started sort of predate even the old green screen, standalone terminal for the web.
Yeah, no Quotrons.
This goes back a ways. When you use, are there any particular type, this is just the last technical question, are there any particular type of confirmations from Western charting, either indicators or chart formations, that you think are more useful and work better with the information from candle chartings? I'm not looking for a specific one, but just sort of the idea of what is a confirmation.
Well, I'll tell you what I use. I mean, it's keep it, the KISS principle, keep it simple, stupid. I just look for horizontal support or resistance because that to me proves that the market has bounced off certain levels at certain times. And if a candlestick signal confirms that, that to me is a potential good opportunity. But I mentioned before the importance of combining candlesticks with Western indicators. We have something called actually the trading triad. Triad is that word for three, and it's a three-legged approach: candlesticks, Western technicals, and the third leg, which a lot of traders either ignore at their own peril, is trade management. And what that means is looking at the risk reward of a trade. So I could have a beautifully defined bullish candlestick signal confirming a multi-tested support, but if it's a poor risk reward trade, I don't do it. So we always have to look at the risk reward.
I think it's an Oscar Wilde quote. He talked about, I think it was Second Marriage, and he said the triumph of hope over experience.
That was actually Samuel Johnson.
Oh,
yeah, Samuel Johnson.
That is absolutely one of the things. That's one of those quotes where you look it up and you got to see who actually came up.
Boswell wrote.
This is absolutely essence. I think it was when I was trading for trade management, which, to my mind, is vastly more important than the initial analysis of getting in. Because, this is something that it is very hard to learn because, in fact, when I started, one of the things I was prone to doing as a very beginner trader on an interbank desk was trying to make money off every trade. This is a disaster. How do you incorporate that into some of the advice that you give? Because what you're doing in candles is educating, and advice is part of that.
Right. So what I would do, I mean, it's interesting because when I was giving trade recommendations to the brokers I had mentioned before, I actually had more losses than wins, but I had the best P&L of my trading group because, you do what you're supposed to. You let the profits ride and you cut the losses. So what's really nice about the candlesticks is there's always a price that says you're wrong. So if we have a hammer with that long lower shadow and you're buying it, you should have a protective stop under the low of the hammer. There's some nuances, like say the low of the hammer is like, let's say 120, whatever it is. And a couple of weeks before the low was 119.85. My stop would be under 119.85, probably under around number 1950. But yeah, risk, you have to define what your risk is, what you're willing to risk as the very first step, because, we've all been through this. We all try to second guess ourselves. We may not put in a stop, and we'll say the market's, going to turn after we put in the stop and go in our direction. But the best time, the most objective time to put in a protective stop is before you put the trade on.
Absolutely. Or as, I remember asking, I came to the trading desk as an English major with a tweed jacket on Wall Street.
I'm visualizing this. Yeah, okay.
Because it was the only jacket I had. My suit wasn't ready yet. And so I would ask, I was used to dealing in words and explanations, and traders were not particularly forthcoming with advice or information or anything else. And usually what you would get were cliches. One, of course, was never turn a day trade into a strategic trade.
Oh, interesting. Okay, I like that one. Yeah.
The essence of this kind of analysis. One thing that I wanted to ask you, and I always ask everybody about this because it's true, there is a sort of confirmation loop in all technical analysis. We're all looking at the same charts. Nowadays, everybody's looking at candle charts. And the fulfillment loop is that everybody looks at the same chart and comes to the same conclusions, or many people do, and it adds enough sometimes weight to a market to get it to move. Is there any way that you use that or can incorporate that into the sort of analysis that you talk about?
Well, one of the, everybody looks at candles, but I don't know the percentage, but most people are not using them correctly, and that's why, you know, we actually call our education Nison candlesticks, using candlesticks the right way. You won't believe, or maybe you would, what I see online about how to use candlesticks, and it's just amazing. So getting the correct education to me is really vital, and that'll help separate you from the competition who are using candles incorrectly. You know, even if you use them correctly, it doesn't mean every trade's going to work out, but at least you're getting the odds more in your favor. You're learning how to use them the way they were developed over hundreds of years in Japan.
Yeah, and certainly, you know, the discipline involved in using an analytical system correctly teaches discipline, and discipline is one of the most important factors in any endeavor, of course, as a person, as a human being, but also certainly as trading. You know, I wanted to move on to a little bit of the current situation in the currency markets. What we've seen over the past, really since the election, the U.S. election back in the fall, and for sterling, the Brexit election, not election, but the Brexit vote last June, is a very pronounced diminution, retreat of volatility. The markets are moving back and forth in ranges, and there doesn't seem to be any willingness, technical or fundamental, to break out of these ranges. Mm-hmm. Do you see anything from a charting point of view or a macro point of view that is driving this or may change? I mean, sometimes I think that the markets are waiting till the European elections. There was this string of elections which have very important ramifications, from Brexit until the German election. Maybe that needs to get out of the way. What would be your view on that?
Well, let me show you what I'm looking at. I actually think, you know, you mentioned the pound dollar, so I just pulled that up.
Right.
I think we had a very important breakout a couple of weeks ago. So let me show you, not many, you know, forex traders will trade a weekly chart, but let me show you what I'm looking at, then I'll go to the daily chart. So this was a major resistance area. I'm showing in the blue line here, right over here. Okay, resistance, and actually let me put a daily chart here. So this was interesting. So this is almost like a bearish engulfing pattern where the black candle wraps around the white candle, which is a negative, a dark cloud cover, which is negative, and so forth. Now, one of the things that I use, one of my favorite strategies, is what I call change of polarity. And essentially, it's a traditional Western signal, but I just made it a more catchy phrase. Essentially, what it means is a prior resistance area becomes new support. So,
that one.
Right, so see how it's holding a support here? So this to me is a key support area right around the 127.50 area. And one of the things candles don't do is give you price targets. One of the things Western technicals do is give you a price target. Okay. So what you could do with a box range, the Japanese call lateral trading environment, a box range, you could take the height of the box range and add that to the breakout point. So let's say run it from 120 to 127, let's say 128. This gives me an upside target to 136 now. And what's interesting is, again, on the weekly chart, okay, look where the next resistance area is, right around the 134.50 area. So just very briefly, what I would be looking at, you know, to say, okay, the market looks good, at least the pound dollar market looks good, the pound looks good, is as long as it holds in a weekly close above this level here. If it doesn't, then very often you get a return to the bottom end of the trading range. But this is a nice example of the candles, how you can see what's happening between the bulls and the bears. This white candle, a bullish engulfing pattern, the bulls are taking over from the bears, the bulls are taking over from the bears over here, the bulls are taking over from the bears, right at the same support area. And this is, you know, what I like when you have multi-tested support, especially with the candlesticks. So, you know, I'm looking for the next resistance up here and key support down around the 127.50 area.
You know, I used to when I was trading, I would usually use candles in conjunction. One of my favorites was Fibonacci levels, especially after you've had the break, because as you say, or the change in trend, what you're looking for at that point, and everybody's going in a direction, is someplace to take your profits.
Right.
And Fibonacci's do that very well. I also think that you're correct as far as the analysis of sterling goes, because it appears to me that from a macro point of view, much of the negative news is already imparted into the price and the long-term price of sterling, and that whatever goes forward from here, it's probably not going to get too much worse. That's sort of a macro view of that. when you look at yen and then the euro, the yen is a little different, but certainly the euro travels along with the pound, and if they affect each other back and forth, probably with the euro having more negative impact on the pound right now. From a macro point of view, we've had a series of European elections. It seems like the Dutch and the French have reaffirmed their loyalty, if you will, to both the EU and, more importantly, I think, because it would come first in any break, the euro and the establishment of the ECB and everything that's going on with, or has gone on with, the financial controls in Europe. Do you think we're going to have to wait until we get through the remaining elections, particularly the threat of the Italian election, before we can get some return to economic interest and economic effect on the euro?
Yeah, I would think so. You know, one of the great things about, and not just candlesticks, but technical analysis, especially in Forex, because there's so much news from so many different countries, you know, between interest rate relationships and politics.
Right.
How can anybody follow that fundamentally? You know, it's great to have a broad overview. I mean, like you mentioned, you're doing great analysis, so you can do broad overviews, but there's always underlying things, you know, you can't keep track of. What's the interest rates, you know, what's the discount rate in the US versus, you know, the rates in Japan. And one of the great things about the charts, it incorporates all the news that's known. So it's a great way of looking, a shortcut of looking at the fundamentals. But one of the things I have found, and one of the things that we talk about in our education, is you could be 100% right on your outlook, but how it affects the market can be completely wrong. And the best case example is the Trump victory. I mean,
Yes.
right. I mean, you could have been thrilled. You know, imagine if you were short equities, let's say you did a bearish option trade or something, or
Yeah.
something in the Forex, and you figure, hey, I'm just going to take a chance. I'm going to be bearish, you know, and Trump wins, and the market's down 800 points that night, and you're jumping up and down, and look what happened, right? So one of the things I suggest is, rather than trying to guess how the market's going to react in the news, is wait to see how the market reacts. If it doesn't go down on bad news, what is that telling you about the market, right? If it's ignoring supposedly bad news, well, what do you think is bad news?
Exactly.
Yeah, yeah.
You know, I was reporting, I was sitting on our trading desk here and blogging and tweeting and doing all the things that you do as a modern economic analyst on that. And it was one of the most exciting nights. This is aside from any political view whatsoever. But from a purely market point of view, it was absolutely fascinating to watch the reactions of the market as it flowed through on the news. It affected everything. It affected the dollar. It affected equities. It affected the whole market. And most of it was because it was so unexpected. What we've seen since then has been a lot of relatively expected results. Mm-hmm. This is affecting our volatility. So we need to get back to, I mean, right now the ECB and the Fed are the original, you know, the main drivers of currency rates. The ECB is not going to be raising rates for a while. The Fed is. Yet this seems to have diminished in its impact on the markets. Do you think this is going to reassert itself anytime soon so we can get back to sort of economic basis and you and I can go back to our business of making predictions and teaching people how to do this?
I'll leave that to you. I just look at the technicals. Yeah, I don't try to predict the fundamentals. That I certainly don't have the experience and background. Yeah. Yeah. So I just like going off what the charts say. So.
You know, one thing that's interesting about technical charting is there are people who, and I know you don't advise this, mm-hmm. But there are people who will rely solely on technical analysis for every piece of information. You know, the idea being that all information that's available, sort of the perfect knowledge theory, is incorporated into technical analysis, into the price level. With the amount of information that's available now to everybody because of the internet, we no longer read one newspaper. We now can surf everywhere. Do you think that has diminished any of the ability of technical analysis to reflect the actual information deluge that's out there?
Not if you're of the belief that the price today, no matter what market is reflective of all the news out there. I mean, it doesn't, in my opinion, it doesn't matter where Facebook, all the internet, like you mentioned, all the internet news, it doesn't matter where it's coming from or how much there is. I mean, if people read something that gets them optimistic about a cross or a pair or even an equity, they may think about buying that market, and that's going to show up in the price. If something negative comes out, they're going to be thinking about selling it. So I think it's all reflected in the price, but it doesn't mean you ignore the news. What I always suggest is be aware of, there's always going to be surprise news. You have no control about that. The Japanese say, if I remember correctly, let me see, just because the water's calm, don't think there aren't any crocodiles. You never know. And that's what protective stops are all about. But the news you are expecting to come out, in my opinion, you don't do a trade before it. If you know, an unemployment number is coming out or some number that's important for a cross or a pair that you're trading, I would stand aside from the trade because, like I said, even if you're correct on your prediction, you could be completely wrong on the market reaction. And then after you see how the markets react, then you could do the trade. So, again, like I said, there's always going to be surprise news, but I think it's really important to keep on top of what news is coming out to let you know, to be careful about getting a trade in before that.
I remember sitting on the trading desk at Credit Suisse in the early 90s when the international trade number was the big number. I remember Friday afternoon, Friday morning at 8:30. And you could never tell. And because we were a market-making desk, you could not step back. Our job was to make a price for whoever came into us for a price. And so that's a kind of a different way of looking at the world. I have a question here I'd like, from someone here, and they'd like to know. They're asking about sort of the macro view on, we're going to have to deal with American politics. One of the things, then they're asking, do you think that when the Trump administration agenda, such as they've now dealt with one step on healthcare, they have tax relief or tax reform, as they're calling it, and what has dropped out of the mix, it seems right now, but was there a stimulus plan? Do you think once these things get in train, you will see more dollar strength over the next year?
Well, the question is, and we have no way of knowing that, at least I don't, is it been discounted already?
It's a good question.
I mean, if it's been discounted, the only way you're going to be able to find out is once these pass and the market doesn't go up, that's telling you all the good news is discounted.
Yeah. I think that's definitely true of equities because we saw that enormous rush up, and it's been pretty stable since then. It hasn't gone back down. It's if it's waiting for the results, and I agree with you that information tells you something, and it probably tells you something important. Okay, I have one more question here, and then we'll go. I'll let you go. One of our listeners wants to know if the ECB moves to a tightening stance. One, do you think they will? And two, will that be accepted by the market as something that's realistic?
That's a Joseph question. If you want to ask me about a chart and what I think about where support and resistance is, I'll be glad to help, but I don't know. I have an MBA in finance investments, but I haven't used any of that information in 30 years.
Okay. I will listen. That is something that I will answer in the next month. Steve, I wanted to thank you very much for taking the time out to spend with us here, and for all of the listeners. You are one of the best known and most respected analysts in the business. You probably taught more people sensible information and sensible thinking and logic about the market than anyone else I know. So again, I thank you very much for spending this time with us.
My pleasure, Joseph. Always good working with you.
All right, take care, Steve. See you soon.
Take care.